Shares of Warner Brothers Discovery are trading at $7.15 and they are down over 44% in this past year. And zooming out on the chart, we can see that things are not looking much better because this stock has been on a pretty steady decline since its IPO all-time high of $24.08. And for my December 2026 price projection, they're expected to have an EPS of 35 cents, and their current price to earnings is negative, but the media industry average, from what I can find, is in the 16 to 20 range. So if we take the difference at 18 and multiply that by their projected 35-cent EPS, then that would give us a share price of $6.30, which is a 12% downside. It looks like other analysts are actually really bullish, with the average one-year analyst price forecast looking at $12.50, which is about 75% higher than where it trades today, with a high estimate of $20 and a low of $7. In terms of fundamentals, Warner Bros. Has missed all 4 of their last earnings calls, and they do not offer a dividend. Taking a look at their revenue and net income, their revenue growth does look really good, but their net income is still recovering from its massive dip in 2022. WBD has a shareholder equity of $45.3 billion and a total debt of $42.6, which makes their debt to equity 94%, and they actually have really good free cash flow at $7.48 billion. But overall, it's really interesting how analysts are expecting the stock to do really, really well, just given that WBD's earnings estimates are pretty low, which is what I base my projection on, and that's why my projection came out a little bearish. But I suspect all of the bullish energy and the projections have a lot to do with the price to sales, because their price to sales is really attractive right now at 0.43, and that's about a quarter the size of your typical price to sales these days, which is, around 2. And listen, they have great free cash flow, good revenue growth up till now. And as for risks, the main one is once your earnings turn positive, people are going to start to use that and your EPS instead of using your revenue and price to sales to value the company. And there's not a ton of room to grow in the EPS. The projections are pretty weak on the earnings side of things. And, that and the debt to equity is really high as well. But I guess all things considered, I'm going to rate WB a hold because I do like their revenue and net income trend. They're both trending up, but I do have some concerns about their long-term EPS projections and valuation potential. And so, that's why it's a hold instead of a buy. And that's all I have for you today on Warner Brothers Discovery. Please drop a like. Let me know which stocks you'd like me to cover next, and I will see you next video.